Okay, people, welcome to your FLT live Zoom call with our gorgeous, beautiful community. This is approximately FLT call 81, something like that. I promise to get it ready for next time and have it right. Doesn't really matter what number it is, though. What matters is that we are online. Welcome from everyone around the world, wherever you are. If we have any new people on this call, you're welcome to have your cameras on or off, your audio on or off. All that we ask is that you're aware of your environment. If it's loud, keep it muted. And if it's too loud anyway, I'll mute it. But myself and Richard run these calls. FLT is Future Leaders Today, and we gear our whole community around financial sovereignty, around this concept and this idea that we can gain, if we gain more sovereignty around our finances, that this breathes life into the rest of our life, our relationships, our work, our career, our life, our health, everything. Fundamentally, the more sovereignty one can have in their life, the greater decisions that we can make. And whilst everything is going on in the world, this huge storm that we see in various different capacities, this is also one of the greatest transference of wealth that we've ever seen. And although wealth doesn't fix any problem, really, ultimately, it can provide more space, more time, and more capability for us to deal with the things we need to deal with in our lives. And the more money that we can have amongst, well, let's say the 99% or 97%, I do truly believe that, a bit like alcohol can just create more of what's inside. If you've got some issues inside, alcohol could bring that up. And I think that finance and money isn't necessarily the root of all evil. It just brings out more of what's inside. So if you want to do good in the world and you've got a bit more money, I do think more of that money in the hands of the right people will lead for a better, more fairer, more just, and more harmonious solutions than leaving it with the 1%. But I will not continue further on that, because I will find my soapbox and stand on it. So before we do, I've got a couple of new people. Hey, Louise, nice to have you with you. We have Mark. So you can welcome to put it on the chat if Mark Bry, who I don't recognize, if you're new, just let us know in the chat, please. So we can say hi and let us know maybe where you're at in your crypto journey. Are you newbies? If you've been in it for a while, that sort of stuff. The theme, I'll share what the theme is going to be for this call, and then I'd love to open it up for questions first, or things that are also coming up. It doesn't matter if it's not on theme. We have the theme to kind of give us a bit of an arrow as we go through. Fundamentally, these calls are community based. So we were looking for interaction, and me and Richard aren't the be all and end all of answers. We have just been in this space for a period of time that we're happy and wish to share. So we're covering today, let's just say portfolio is the umbrella we'll be talking about today. And specifically under portfolio, we're looking at cycles. Well, because right now there's quite a few things pumping. There's opportunities, but at the same time that can get people lost, thinking we're in some huge recovery phase and all arrows are green and pointing up. So that's the general gist that we're going to have for about the next 80 minutes or so, 75 minutes. But we got some seasoned veterans on here, not just from our community, but also within crypto. So I'd love, there's not many of us on this call, so each of you can share if you wish, maybe what's coming up for you, or something that you'd love to bring into the group for like a shared consensus opinion of. Doesn't mean that it's the right answer, but through sharing, we can gain a lot. So I'm not going to pick on people, but I'd love at least a few of you to share if you've got questions or what's coming up for you. Anyone in particular want to take the microphone first? As you'll know, I'm very good at staying silent until somebody says I will.
We've got all day.
Otherwise, you just could listen to me and Richard talk, which I've listened to me and Richard talk, and I get bored sometimes. I think, as Mark, have you got a bed sheet over your head? I'm not too sure. So Bryce says, I am new. I used to go to the crypto meeting in PDC in Playa del Carmen. Bryce, welcome to us again. I'm in sunny England. It feels warmer than Mexico at the minute. I'm not too sure what Mark's saying there. So no questions from anyone at the minute. Louise, you've always got a few questions up your sleeve. Can I pick on you? Got something going on. Nice to have you with us again, Louise, as well.
not really got too much going on, to be honest, because I've not been investing too much in crypto recently. I've kind of just like held my portfolio, but I've not really been watching the markets that much. The only thing I've been watching is ETH, because a couple of months ago I started dabbling in NFTs, and I sold one for a decent little profit. So it's all sat in ETH. So I've been watching that crash and been crying, and then watched it gradually on the rise again. But I've not really been buying so much recently, or really in the crypto space at all. I've kind of taken a backseat, focusing on other investments.
Oh, that's good. I think everyone, once they've been in crypto a while enough, reaches a stage where someone goes, "Oh, how's that crypto thing doing?" And you go, "I don't know." Like you almost become. We were talking about this earlier. I used the word numb, but I said I think the word actually is just comfortably accepting. Like I think you go from, just like we'll show the psychology charts later, you get really, everyone that gets into crypto gets really on it and excited, and it's everything at the beginning. Then there's this natural point where it hurts, and then we kind of find our settled ground. So that's cool. No worries. Well, thank you for sharing, Louise. We can cover a little bit about ETH's journey as well. Okay, so if no one else has, well, at any single point, you're welcome to put your questions in. Otherwise, me and Richard will continue our journey. But I'm going to caveat here. Some of you who will know that you've been on these calls for a while, I'm going to come to you for questions. Don't want any crap off you. You're just going to unmute. You're going to just give us your heart and your soul answer to things, because you've been in it long enough that your views are respected. And ultimately, some people will be listening back to this, and it will be golden nuggets for people. So we will then begin. Rod, is that your hand, or? Oh, it is.
It was my hand. Yes, Daniel. This isn't a portfolio question, but I've been watching what the Fed's been doing lately and other regulators, and I wondered if there was a consensus on what we think the impact of regulation is going to be on the whole of the crypto sphere.
I think that, to be fair, is easily going to be weaved into what we're talking about. This is, what was it called, Richard? You were telling me earlier.
Well, the thing that's different, regulation is different, but we've got at the moment, when you look at what's happening with the markets, they called it the Inflation Reduction Act, which seems to be creating the pump at the moment because they passed that bill late last week, I think, in America. And my understanding is that's going to, that is for climate change, so investing in green energy and infrastructure and things like that. All that means really is that money is going to go straight into the stock market, and so it's a liquidity. Well, it's just pumping liquidity into the market. So that's, in my opinion, why we're getting that kind of the froth coming back into the market again, and that's why altcoins are potentially pumping, and Bitcoin's is hovering around the place it is, and you know, the bigger coins are doing what they're doing. But so confidence has come back into the market. I'm not convinced by it. But yeah, that's, you know, we can talk a little bit around the Anti-Inflation Act and what that actually means and stuff. But in terms of regulation, I mean, I think in a general note, I think you'd agree, Dan, it's like regulation, although we don't really, you know, on one side, it's, you don't necessarily want it in crypto, but in other places, regulation is what's going to bring the next real wave of adoption, basically. So as people get confident in regulated products, then you're going to have more money coming into the market, and then that will pump everyone's bags, basically, and it'll create a rise in general people's crypto portfolios. But it's where the line is drawn, really, in terms of what do they regulate. You know, they've talked about regulating in this country. There was a thing in the UK talking about trying to regulate hot wallets, I think, and DeFi and all this kind of stuff. And there's no way they can really do a lot of these things. They can start banning things and all the rest of it. So it's a big thread to pull on that. But I mean, you know, that's my 2 cents overview of it. I think regulation isn't necessarily a bad thing. It depends where you're invested. But it will obviously put the brakes on the development of certain products and all the rest of it. But undoubtedly, they released that thing about the 9 cryptos as well, didn't they? The 9 different projects that they were deeming securities, and that's just the tip of the iceberg. So, you know, what they've done with XRP, and I'm not invested in any of the coins that they talked about that were they were saying securities, but they all got delisted from exchanges straight away, didn't they? So that was the net effect of that. And anyone holding those coins is now, like, you know, waiting for the outcome of those investigations, which could rumble on for God knows how long. So I don't think it's going to be disruptive for sure, but it's a sort of a cycle you got to go through. All these things cycles.
I was trying to find though, because I think Rod, were you referring in particular to? Because I saw the headline article, I didn't read it because I didn't have time to click on it. Around they've released there being US Congress or some US government perspective have released a new set of guidelines around regulations. Is that what you were referring to? Or was it USA based or UK based? Actually, I should ask that.
I think it was US based, and I think it was the SEC.
Yeah.
And as Rich said, it is the 9 things that they've deemed to be securities. But also, I mean, what we've got going on in the UK at the moment, I'm sure you're aware of, is that the wonderful government is saying that they might take the Bank of England back under their control.
Oh, I didn't know that.
Nuts. Yeah, because there's a lot of fuss going on about the Bank of England has let inflation get out of control, and they should have acted sooner. But it's just posturing, I think. But I mean, generally speaking, my view is that, you know, the establishment will fight back hard against crypto, because crypto is the means by which the centralization of power and wealth will no longer be centralized. It will be distributed and given back to the people where it should be. So they're going to kick and scream against all of this.
Well, in its purest form, it would be. I mean, it's like, I think sometimes we have to separate, like even in our Play It Carmen group, where we're having issues with this word crypto, because it's almost, it's like someone saying, I don't know, dance music. It covers such a broad subject of things, including Northern Soul and non-electronic music and all sorts. Like every music in its own essence, in a way, is dance music. So I think I hear what you're saying, and I agree with. You're referring to crypto or blockchain in its purest of forms, which is this idea of a decentralized, non-governmental form of tokenized exchange. But I think it's inevitable. This is my own personal view. I think it's inevitable that finance, because that's the last bastion that still takes 5 days to send money to Australia. I think it's inevitable that finance will find its way onto a blockchain. I think a lot of data, and that's all money is these days, will find its way to a blockchain. I personally don't. It depends what view of the future you want to look at. If you want to see one where society kind of continues, but in some sort of a new guise, I think finance will find its way into a blockchain, and will be not much that different from what we have today, except more control, more ability to turn things on and off. But I do think what will continue to occur is in the same way we have a black market for everything from drugs to, you know, unfortunately some of it is guns, but we have black markets for lots of things. But there's even a black market for rose petals, I found out recently, and it's ridiculous how much a kilogram of rose petals goes for. And I think that this will be concurrent. I think we will have 2 different forms of cryptocurrencies, because the only other future where we don't have the purest view is if the purest view is the main view. And for that to happen is a complete transformation in and around society. I do think we'll actually get there at some point, but I think short term being the next 10 years, I think we'll just see money moves itself onto a blockchain. So I think they'll kind of work that. I don't think institutions will push back. I think they'll push back against that purist view of crypto and say it's bad and all sorts of other things. But I don't think they can ever stop it. And my metric for this is when I meet people who think, I don't know, Bitcoin's bad or crypto's bad, I usually ask, like, do you think over the last 10 years there's more or less trust in governments? You know, what's this less? More or less trust in finance less and banks less. I just think for as long as that metric points in that direction, more and more people, through unfortunately harsh times and things, will just start to find safety, comfort. They'll start to find some form of solace, or something they can't get from society out of crypto. So I actually think they'll both kind of work. I think the regulation will just allow crypto or blockchain to go from this scary unknown word to a more known word. It's my 2 pence on it anyway.
I think the extra thing is, I mean, refer back to our conversation on the last call about decentralization and centralization in terms of regulation and crypto. There's definitely, they can't ignore crypto now. They can't ignore Bitcoin. And in terms of, like what you said about the Bank of England, you know, and the government taking control back of central banks, that is happening already. I don't think there's already overtures in America having it. I understand. I know in lots of countries, like the distinction between the central bank and the government is getting really, really blurred, because that relationship was so tight before anyway. But it's kind of like they realize now that, you know, how much more control it can give. And if you're a government, you kind of want more control, right? That's just a natural instinct. But I think it's a move at that point, potentially, towards central bank digital currencies, right? And that's what's happening in the world at the moment is leading to the inevitability of that. And when you sort of say, Daniel, that people will choose which side they go on, whether it's the decentralized side or the centralized side, decentralization is definitely going to be, I think, given the label of, you know, black market and drug runners and money launderers and all this stuff. And centralization will be, hey, it's all good because you know what, it can be regulated, right? So you kind of got this double-edged sword where you need regulation to bring people into the space so they get confident about it. But all that does is at the same time is it accelerates this idea of misunderstanding about what blockchain and centralization and decentralization potentially offers. And if there is and we talk about it in the course, if there's potentially a black swan event where your money in your bank account ends up disappearing, and suddenly over the horizon comes the government in the form of the central bank going, don't worry, your funds are safe, you can have them in the form of you know, central bank digital dollar or pound, then you're going to go, oh, thank God, I've got my money back. But then you're in that centralized system and you're party to the whole CBDC conversation and all that. So who knows where it's going to go? But a lot of people more cleverer than me and Daniel have posited this theory that we're just on the horizon of this black swan event where central bank digital currencies become this kind of option for in the you know, awareness of people about what it means and what problems it can kind of solve for them, but without really understanding what the problem was in the first place, and understanding centralization and decentralization. So I think, you know, regulation is inevitable, but I think at some point you need to understand what it means. You know, that's my viewpoint. It's like, and unfortunately, a lot of people won't get to that point because it will be foisted upon them, I think, unfortunately. So, you know, you asked about regulation. I think is a double-edged sword. It depends where you are.
Well, that's my Wi-Fi.
Back on what I've just said there, I went on a bit of a monologue.
No. 1 2 1 2 1 2 1 2.
And incidentally, I know the Bank of England were have been speaking to Ripple about using at least a lot, you know, the XRP ledger and stuff for the testing it for their own central bank digital currency. So, are you still involved in Ripple, or you got any thoughts on regulation from the state side? Yeah, you muted, buddy.
Did you speak to me or Jerry?
Uh,
Here we go.
Yeah, Jerry.
XRP, yeah, I'm still a big XRP holder. It's probably one of my larger bags, and you know, within the community, people have talked about the Bank of England being call it a paid client of Ripple, the company, for you know, maybe the last year or so. You know, it's fascinating actually to read all the you know, there's a couple of YouTubers. There's a whole truckload of XRP YouTubers out there, but the news on a daily, weekly basis of governments and banks and, you know, the partnerships they have. I had no idea what kind of strata was involved in moving money around the world. There's just so many partners and so many movers, you know, in the whole scheme of it all. And I look at, you know, how long it takes to move things now through Swift and all that kind of stuff, and it takes so many days. And you think so many people have their little fingers in the pie, you know, moving this money around, and how money gets anywhere, to me is you know, a mystery. But yeah, I've still got my fingers crossed on Ripple. I've taken a kind of a backseat to governments and CBDCs, because I think, how could governments not, you know, take it, you know, even as citizens, we should want our governments to use crypto because of how economical it is. You know, our governments waste money so much. Now, granted, there's the dark cloud that we all, you know, especially in Canada with Castro, you know, like there's this dark cloud of what our government really is and how they will use such a tool. But, you know, let's say, you know, that we all had governments that worked for us. We'd be demanding they use crypto because it's so efficient. You know, why would we want our governments being so wasteful? And, you know, you see you see everything, you know, how can you waste money when everything's on the blockchain? You know, but the problem, and we've seen it the last year or so, is when you get onto the blockchain, you get off of Swift. Now, there's been news the last month or so that Swift will use XRP, and you know, if that happens, it would be, you know, it'd be incredible. People, like, basically the function of XRP would completely replace Swift. It's, if people don't know, to go from one currency to another, the idea is the first currency buys XRP, because you can't literally send money over a blockchain, but you can send a crypto, you know? So you buy a crypto, you send it over the blockchain, you sell a crypto. So the idea of XRP and its function is it takes what Swift does in 4 days or 5 days with no tracking, and it turns it into a 3 or 4 second operation with the ability to send messages and have the whole transaction settled in 3 seconds. And the argument is the volatility that the world experiences in 4 days, and the fact that banks have to keep all this money tied up on both ends of the transaction in order to support it, that volatility is completely wiped out in 3 seconds. And why wouldn't we want our governments to work the same way, right? But the problem is the governments can't use Swift to create embargoes against other countries, you know, and I think that's probably, you know, unbeknownst to us, has been one of the reasons to keep Swift alive, is to regulate.
Sorry, you mean governments can use Swift to stop another country? You said can't, you mean can, yeah?
Oh, sorry. Well, yeah, well, that's certainly what I meant. That Swift is used now more as
it's a weapon, yeah,
as a weapon, yes, to, you know, to regulate and control governments that others think should be controlled, right? And you get countries on the blockchain, you get people circumventing Swift using another system, or, you know, the BRICS nations entirely using it, you know, going outside of it. Then you know, then there's a lot of I think there's the question of regulation becomes really interesting then, because you almost think the governments are going to want to keep Swift alive as long as they can. It's the, but who knows? I think money right now, probably more than we know, is already moving around the blockchain. You talk about these open corridors all the time between countries. There's a lot of advertisements we see now about how quickly money can be sent and how cheaply money can be sent. And I think every time I see one of these ads, I think, oh, there's somebody that's using a blockchain function or other,
a lot of those though. So I'm dealing with I have a project with a friend on doing arbitrage for a different country. So I'm not joking, I must have 20 different apps on my phone that are tiny, you wouldn't even know of them, and they're like PayPal equivalents. I send money from PayPal to PayPal, it's instantaneous. And so for what I've seen, a lot of all these apps for sending money fast across countries relies on inter-app. It's like its own ecosystem. So I think the only one that I'm aware of that's ever large scale that used blockchain was MoneyGram. Was it MoneyGram or Western Union with Ripple? MoneyGram, wasn't it?
Yeah, it was MoneyGram for a while. I think MoneyGram's with Stellar now. Maybe.
Yeah, it's moved away, but I think they're the only big ones that I've seen. But a lot of the small ones keep it in their ecosystem. But an argument I heard against all this, and it's one I can't disagree with. Yeah, I still hold things like XRP, and it's this dichotomy that's within me sometimes of what do I believe in, and quite often I think it's very difficult to say you believe in something when you don't stand behind it. And I believe in the future that either Jerry or Rod mentioned earlier, this idea of the traditional aspect of crypto, of decentralization, of a form of, let's say, currency or store of value or money that's around the planet that everyone can hold. And we're not pegged against a dollar. Right now, the whole world values everything. Eventually, everything rolls up and dollars at the top. And so I like this idea that something else is at the top, and I would like it to be something that's not controlled by governments, such as Bitcoin. That would be my holy grail. And I feel like XRP is the banker's coin. And I still hold XRP. And my personal justification of holding it is it's my just in case. If it does do really well and does well, and I make a lot of money from that, I will take those funds and redistribute them. And I'd rather them be in my hands than another wealthy person's hands who's already got lots. But I can't help but agree, or it is my opinion, that if XRP does what it's meant to do, and you only have to start looking at it, I think anyone is a fool to look at XRP and say, I've heard people say it's a scam coin, it's a crap coin. I don't believe you can achieve what they've achieved and get in the room with the people they've been in the room with and be listed on God knows how many World Economic IMF papers and be a scam. Like it doesn't make any sense. But I also can't see how XRP is going to benefit people, you and me, other than it's going to make money faster. And but probably most of us on this call are not suffering from a slow money-itis. The people that really need international transfers are the people who are getting raped and pillaged with $5, $15 fees for sending $30 and stuff. So I have an issue knowing where XRP sits in my system of do I want it? Like on the one hand, of course I do, because I actually want society to carry on. The meaning, I'm not one of these people, as much as I'm a free liberal idealist. My greatest fear is the collapse of society, because most society doesn't have in my opinion, have the consciousness to actually go, oh, okay, we need to all band together. I think a broken society would be terrible. So I want XRP to work because I think we need to transition. But I have issues accepting XRP as a solution that helps everybody. And there's nothing against you, Jerry, like having a holdings. Oh. I've still got a holdings of it. The more I talk about it and I talk about decentralization, I just find that XRP is almost the competitor to decentralization of finance.
Well, I don't know where I know, and I'm with you on this coin flip of XRP, the banker's coin, and way back in the day when XRP was, created, it was one of the guys was Jed McCaleb, and he's gone over to Stellar, and the hierarchy within XRP people is XRP does big institutional transfers, and XLM is you know, how
People.
money flows more on a retail scale. But I've got the same problem in that a lot of my XRP was purchased several years ago. You know, and what I've learned about the BIS, the MIF, all the central banks, you know, just the different mechanisms in place with all these SDRs that I think are going to come everybody's way when all these leaders destroy their economies, right? Like the way I could see it is, like, you know, I look at what is happening in Canada, and we're screwed as far as our economy goes. And it wouldn't surprise me any day that, you know, I turn on my computer and it says that we're getting SDRs because it's safe money, and, you know, and that's our new money. It wouldn't surprise me if that ran on the blockchain. Like I get it, and it's a difficult thing for me to kind of deal with, and that's why, you know, I've had other cryptos along the way. I took a hit. I'm one of the Celsius people who's up in the air with some of my assets, but I've had plans with other cryptos to, you know, to put off any decisions with XRP. I've just held it, and I've thought I'd be silly, if this is the way the world's moving, I'd be silly to get rid of it, you know, as much as and I can't. But at the same time, I look at, you know, Garlinghouse standing beside, you know, Lagarde and all these international money people, and it bugs me, you know, it just bugs me. But I don't, the thing about XRP being centralized, I know they've got a big escrow that they hold, but the actual ledger, the XRPL, I don't believe is.
Yeah, so I will agree. So the technical definition of their blockchain, you could argue, is decentralized. But then if we look, when I refer to it being the competitor of decentralization, what I mean here is, let's just say for the people, non-government controlled. Yeah, over here it's technically blockchain-wise decentralized, but the owners of those nodes are the big banks. So what I mean is, it's centralized in the sense that all of the decentralized nodes are operating within a centralized system. So one could argue it's controlled by the same entities that control current money, even though it's a decentralized blockchain. So that, I think that's where I meant from it, because I agree, it's not like there's one big off switch. But I want to pick on something you just said there, Jerry, because you said a term, and it's one of these ones that you mentioned, SDR. So I mentioned
drawing rights.
Yeah. Do you want to? I'm always curious to get other people's takes on it. Do you think you can eloquently, or as best as you can, explain what is a special drawing right?
I don't know how eloquently I can get it, but if you think about an SDR, almost like an index fund of currencies. So an SDR is a basket of currencies, and I believe that basket is tied to the economy of any given country. So if, like, Canada, the way Canada works, we would have a certain allotment of an SDR currency based, and I believe there's some kind of a tie to GDP or something. Like, the SDR has to arrange out a value somehow, and I believe that's tied to the government's country, or possibly if it's in a loan situation, how much of a loan. Like, there's going to be some kind of a peg of to how much that the SDR is, but it's a basket of currencies, like an index fund is a basket of company.
So would you say then, to just expand this a bit further, and I'm gonna, because I'll take what you just said there and put it through my filter as well, in the sense that right now the US dollar is the reserve currency. That means that when we do international trade by any country, you have to move whatever you're buying in whatever currency into dollars. The other country receives the dollars and converts that to whatever they need. The US dollar is the reserve currency. Special drawing rights, SDR, is actually available today, but it's very rarely called upon by a country. And this idea that what people are talking about, central bank digital currencies and moving away from the dollar and all of these things, is this concept that the SDR, this basket of currencies, a collection of strong currencies, probably pound, euro, yen, CAD, USD, which means we're not at the mercy of any one currency. They all form together. And each country, dependent maybe based on its GDP. I've heard also it would based on how much gold you've got for various things, will be allocated pro rata. We have this much SDRs for the world. You get this much, you get this much, you get this much. But that has not happened and has not had agreed to happen. All of this is still in the, there's a lot of talk about it and you can read it from different papers, but am I right from your perspective in also saying that this isn't a thing yet, but it is what people are speculating may come next? Would you say that's a fair summary?
It is to me, and then maybe more eloquent like you wanted.
My understanding is it is used, stressful drawing rights are used because they're used by the IMF, and the IMF, the International Monetary Fund, use it as a mechanism to, like I said, a quota for a country to repay loans and all this kind of stuff, basically based on what the IMF wants, the International Monetary Fund. So we're getting quite into some heavy stuff there, but I think the special drawing rights, and incidentally, if you can read what you want to in terms of the current war with Ukraine and things like that, but what that's forcing, when we talked about weaponized, with SWIFT, weaponizing SWIFT, basically, Russia, they'd stop Russia from being able to use, what they do, they took away the dollars, which basically meant that Russia couldn't repay their oil, what was it, a loan, anyway, they couldn't pay back a loan basically in the currency that they normally would. So then they had to start thinking, how are we going to do this? So then you got Russia and China, and I think potentially Brazil, anyway, some of the BRICS nations, who are then going to create their own special drawing rights basket of their own currencies. And so this is, we're in a kind of financial warfare territory where it's like there's a battle for who owns the rights to say what currency people trade in, and special drawing rights comes into that as well. So that's my understanding of it. But it's been going since I think the 70s, the special drawing rights, I think. So it is when the IMF was created.
Yeah, I think it actually also got created when I think it was first talked about as well with the Bretton Woods Agreement 2. And they talked about having a currency. I think that's when it first got talked about, but for some reason, well, the US dollar took over from that. So what we want to do then, let's, unless is there anyone that's got any other questions on that? Jack's got a question in here, because we definitely want to pull up some stuff on cycles towards the end of this call. But Jack says, I've got a question on, can you cash flow from crypto? And you mentioned from the course, if you hold crypto and want to gain access to it, you can do so without selling by getting a loan. How do you manage that? So I think I understand the question there, Jack. You're saying if you own some crypto assets, can you get some cash flow from it, but without selling it? Which is a very timely question, and maybe something you might want to not do, given what's going on at the minute. Let's just have a seat. Anybody here experiencing some of the pain from Celsius? 1, 2, no, 3, and there. So
last week's call.
Yeah, I've watched last week's call. But
I'm gonna have to go back and listen to it. I didn't listen to it. I just got back into this.
Well, we now have a Celsius support group. But to answer Jack's question quickly, there are companies where you can store your crypto, just like a bank. You keep your cash there, and these companies will lock up some of that crypto as collateral and give you a loan on it. And you can get anywhere up to like 75%. So you lock up 10 grand, you can get out 7.5 grand. So you can do it. The big one was Celsius. What did it have? 11.8 billion at its peak or something like that. Now with the crypto down, I think it's at about 4 or 5 billion. Anyway, they've gone bust, and it's a big shit show, and very painful for a lot of people. There are other companies. Nexo is probably the next biggest one. Rich, you reckon?
Yeah, yeah, I'd say so. And I saw another one that I was looking at a while ago. Can you hear me?
Yeah, I tapped it wrong. Carry on.
I think another Voyager also went bust, and Hodl is another one which I remember seeing on a lot of things that have gone bust. I mean, we touched on the last call. They were all linked to Luna and Terra, and they were all getting yield on. They all bought UST and then staked it for 20% return, which was something most of us, a lot of, I know me, I was doing it. I can't remember if you were doing it, Daniel, but we were doing it. But a lot of the companies, that's basically what they were doing. They were like promising yield to their customers and then basically just giving it to Terra and getting that yield and then passing it back on, and doing other things with it as well, basically. But it created this domino effect where all these different lending companies have basically gone bust because they were acting really, really irresponsibly, just like bankers. And obviously, the promise was that they weren't going to act like bankers, and that crypto is the hope that it's this new vanguard of anti-bank and you can be your own bank and all that kind of stuff. But that a lot of them were just acting really irresponsibly.
Irresponsibly.
Because it was in an up market, everyone makes money as soon as anything happens, which is critical to the infrastructure and foundation of the industry itself, and everyone's leveraged against each other. The whole thing just fell apart. So yeah, I think my opinion is it's making a massive use case for Bitcoin, and I think over the next few years the ecosystem around Bitcoin is really going to grow, because it's been left behind as the old man, and you've got all these wonderful things, all these different wonderful cryptocurrencies that are doing all these different things at the moment, as a counter to Ethereum and all the rest of it. They're all trying to do something different, but ultimately, where's the value? And if Bitcoin's been around long enough to actually withhold its value over time, then people are looking at it again seriously, and the ecosystem is going to grow faster now, I think. And so I think the lending side of things will be more decentralized and more properly organized, giving more realistic returns. So I think where you can earn some cash flow from it, or at least borrow against it, I certainly wouldn't be doing that at the moment, but I think in a year or two, when Bitcoin really kind of proves its use case, I think that will be the time to sort of get back into it. People are saying Ethereum. We talked about looking at Ethereum. You've got the Ethereum Merge happening. I don't know if it's moved again, but soon. So people are expecting that to increase the price of it, because it's going to start limiting the supply. So and a lot of institutions are getting interested in Ethereum because you can get yield from it, so you can stake it and do different things. So so that's the place really, I think, where the focus is in terms of being able to borrow or at least make income from it. So a lot of places looking at Ethereum as a going back to safety again, basically, and trying to earn some money from it. So
yeah, and I think the one thing we want to put on here as well, it's been a massive thing for me and Richard this last 6 months, is the re-understanding, maybe understand is the wrong word, but the re-looking at decentralization and your own security and safety, like old school basic core principles of crypto. So anywhere that's going to give you a loan, as far as I'm aware, is centralized. I'm not aware of a single decentralized place where you can, or they probably do exist, my mind's going to a couple, but the big ones you think about are all centralized. And if anything can be gained from the last 4 months or last 6 months of this time, since Luna and since Celsius and everything's happened, is the fragility of this market. Like, we've gone from I think we touched 3 trillion as a crypto market. We're now less, I've got it here. We're less than a trillion, 1.1 trillion. So we've just popped over it with this recent pump from the money that's coming back into the market. But it's only when you start looking at gold and Forex and derivatives and all these other markets, and there's really good infographics that show how big they are. And if the biggest one's this big and the next one's this big and the next one's this big, crypto is like that analogy when they say all the atoms of the universe will fit on the end of a pin. I mean, crypto is so small, so manipulatable and manipulated that when we start, I've got a lot of my wealth and my life is in crypto. And so I've really felt it, but you really start to understand that it's super high risk. And if we're going to start to put our money into centralized companies to lend and borrow against that, we're at the mercy of it. I mean, I got all my money out of Celsius, but I couldn't pay the loan back. And so and I only borrowed 25% against my collateral. So I've got Bitcoin stored in there that I can't even get out at the minute. And I wouldn't want more people to go through that. So I think whilst we're in this period, like Richard just said, right now, I wouldn't be doing that. I really feel like this is a time to really get our heads around decentralization, around storing our own crypto, storing our own coins, understanding that there's real safety in hot and cold storage. And then when the market matures again, I think this is the equivalent of that .com period. I don't know how old you are, Jack, but where people could just put .com on their name and the share price went up. And when we had the .com bubble crash, it collapsed. But .com didn't disappear. Tech didn't disappear. The internet didn't disappear. It went through a maturing period. And so as painful as this period is, I think that is occurring. So in a few years, when products and tech and things are just stronger, better offerings, I think it maybe will come back around again. But definitely the minute being interested and curious is cool. But my personal opinion is real caution around this stuff, because this last 6 months has reminded me properly how young and how fragile the crypto market is. And I wouldn't want to see people in the FLT community unnecessarily have to go through pain.
Definitely not. I think, yeah, I urge people to sort of look back at just a brief thing on decentralization. The conversation we had last week on YouTube, last call. Sorry, just to run through what's happened and our feelings on that. I think as well, what really encourage people to really zoom out and really kind of look at where we are in cycles. So it's probably quite a good time to start talking about cycles and market psychology and things.
So funny.
I think the one thing we were talking about, and regulation, it fits into all this as well. And I think one thing that's happened in the last week is that Blackrock, huge investment firm with trillions and trillions of under management, have partnered with Coinbase. Now, you can have your own opinion about Coinbase. I won't go anywhere near Coinbase anymore, but that's my personal reasons. It's lots, it's the entry point for loads and loads of people. And lots of people are saying, well, that signals. And the reason they partnered is to bring institutional investors into crypto. Now, just go away and have a look at what BlackRock does and how they operate and how they're linked, to all the different. So you got BlackRock and companies like Vanguard and different mega with trillions and trillions under asset management. And to me, everyone's sort of saying this signals like a big wave of, acceptance. It's the next, like we said, it's the next sort of wave of adoption things, because it's going to signal people coming into the market. But if you look at BlackRock and Vanguard, any of these companies, I don't think they want to have a $24,000 Bitcoin open to their customers. I think they're getting in and laying the foundations to, potentially, manipulate the market and bring the price down so that everyone gets a lower entry, basically. So that's the way I see it. And I just saw something sort of flashed up on my Twitter, which I will share. There's a guy called Larry Fink, and he's the guy that sort of runs BlackRock, and he's selling his shares at the rate of knots, basically, at the moment. So you kind of just have to look what they do and not what they say, in terms of trying to understand really where we are in this market and kind of sense make your own way through it, to kind of understand the bigger picture, to make your own decisions. Because you can't make your own decisions on isolation around this coin's pumping and this is what's happening, and everyone thinks like we're going to go to the moon again and we're going to have a $100,000 Bitcoin by the end of the year and it's going to have this massive effect on the market. I think you've really got to completely zoom out constantly and just kind of sense make your way through it. So we wanted to share some of the stuff that we did in the course around market cycles, just to kind of relook at, no one can really say for sure, but there's patterns. So do you want to take over that, Dan?
Sharing. This is the pattern. This is the pattern that most people are familiar with, which means everyone gets in as we're rising. This is what we're just conscious of occurring right now. And then there's a bit of a dip, and then people call it a correction. And they hold on, and then at the very bottom, when everyone gets bored, they sell, and then everything pumps. This is a joke, by the way. This isn't a real market cycle, but this is actually I've done this.
Yeah, everyone's done it, right?
There you go. Everyone's done
feels
it.
that.
So you could argue this is the cycle of a trader. It's just one that, as Richard just says, where you're only looking at one thing, and that sometimes the last thing you want to do is get into something. If it's green, 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 green. I had who was it used to say, only buy something on a red day. Because at the very least, if it is going up still, you just bought it on a dip. But you don't want to buy on a green day, because what will follow a green day if you bought on the top is another green day. But we're more interested. How do I make this a bit smaller? There we go. We're more interested in the right-hand side. So there's a really nice picture that looks like this, which is a little bit more difficult to understand. So we're just going to start with this one. Psychology of a crypto trader. And we can pretty much overlay this on so many charts, but we start at, as you can see, hope. Emojis often tell better stories these days. Optimism, thrill, euphoria, the greed buy. This would be the same as buying here.
That's when all your friends are asking you about Bitcoin. You know, it's time to sell.
And there's a really good, will I find it in time? The greed and fear index. I'm really fascinated with this. This is it. Alternative me.
You know where they get the data to build that?
Say that again.
Do you know where they get the data for that fear and greed, like how it's calculated? I think it's cool too. I just never know. I don't know how it works.
Is it not to do with when things are oversold and undersold?
Yeah. And you've got the strength, RSI and things like that on it, I think, as well.
Yeah, I think it's to do with why I measure data sources, volatility, momentum, social media,
right there.
surveys, which are currently paused, dominance. It's like when it says surveys on so many charts, it says, how do you feel about this today? Dominance and trends. So even, because I once pondered this, because I think that it's a really good, there's a guy who talked about only buying when crypto, only selling when crypto is at this, I pointed on the screen then, I realized you can't see my finger, like above 70 to 80, sell here, and only buys when it's between 10 and 20.
Yeah.
And if you only did those two things, you wouldn't trade often, but you would probably make quite a lot of money.
Even that right there emphasizes what Richard just said about cycles, right? And what you're saying about cycles now, like that's because those two things are typically far apart, right? And that would distinguish like a cycle right there.
Yeah, and it also is the big difference as well between, I think when you know a cycle, well, first of all, knowing that cycles are happening all the time, like we're in a cycle now. You're in a cycle of your day, of your life, of your career, of crypto's in a cycle, the UK is in a cycle, the USA is like they're everywhere. So it's like realizing that there's more order to everything that occurs in the world than one would think. And there's been tons of work on am I still on? Yeah. There's been tons of work done on psychology charts and what's going on in the world, like from a news perspective. And I just mean mainstream news and what goes on trading charts. So it's one, realizing that we're in a cycle, but it's also kind of guessworking as best you can roughly where we are, because it makes a big difference. Like this greed buy here, this euphoria, I've caught the back end of one. So I kind of joined crypto somewhere probably around anxiety, but when I joined, anxiety felt like a small dip because I didn't know the cycles, and then I caught all this run up on the last one, and it really is crazy. So as you can see, this overly simplified but emoji one, you can see it's going up, everything's good. Down, denial is where we think, no, this can't be happening. Then we start to panic. Then we panic sell at the bottom, which is of course this bit. And then we're back to hope again. This all came about from this chart here, which is like the they call it the Wall Street cheat sheet. I can't zoom in anymore there. There we go. And I can show this on the next slide, overlaid directly over the Bitcoin chart over the last cycle. And I'm going to let Richard explain that in a minute, but you can clearly see the connections here. You can see the patterns as they play out, and there's even more accurate ones than this. So Rich, do you want to, I know you're into this
Well,
more
I
than
think
me.
there's patterns within patterns. So if you're looking at, I mean, there's cycles within cycles, and that's the thing to be aware of. Is like, there's cycles in nature, there's cycles everywhere in life, and this is why TA, technical analysis of cryptocurrencies, is so people use it as the be all and end all. They don't look at macroeconomics a lot of the time. They just literally look at charts, because literally a cycle is in stocks or crypto or anything sort of thing, it's driven by human behavior. That's pure and simple, and humans will follow this exact pattern, and the smart people understand these patterns and these cycles. And there are macro things that happen, but I mean, you've got we're in the middle of the Bitcoin halving at the moment, and that basically dictates a bigger cycle of the entire crypto market. And then you've got each altcoin will have its own cycle as well within that, and the altcoin market will have its own cycle as an entire market. Everything else apart from Bitcoin. So it's understanding the cycles within cycles. In terms of where we are at the moment, I mean, I've spent more and more time. We talk about it in the course as well in later modules. So I encourage people to sort of run through that if you have time and do the course. But we talk about kind of, once you're in a space and you've made money, understanding how to take profit, to exit, and keep recycling. Because the best investors, the best traders, they understand where everyone else is going in this cycle, and they will move their investments right around based on and being disconnected from your emotions in some way. But I think in terms of where I think we are, I think we're at that double top, which is complacency. And I think that's my personal place at the moment. So what I was going to say was around when you're exiting coins and trying to just redistribute profits and things, I think what I've done is tried to hedge. So I've hedged. I've got a lot of my personal net worth in crypto. I'm super passionate about it, and I choose the projects that I go into. But at the same time, I need cash flow, and at the same time, I kind of want to hedge against crypto as well. And so it's kind of moving through these different cycles. And my feeling is that the things we were talking about earlier, which is around what Blackrock are doing, what the regulation is happening, the money printing that's going on. I think it's to create this second pump for complacency. So, this second top, so that's that's the way I'm operating at the moment. It doesn't mean I'm right. I sold some stuff off yesterday, and then immediately had a dream last night that Bitcoin went to $70,000, and I woke up going, like checking my phone, and so I can be wrong. I'm willing to be wrong, but I know what I personally need for my for my family and all the rest of it. So I have to zoom out and take all these different things into consideration and think, well, where do I think we are here, using my own kind of sense making and looking at big news and just knowing what I know about banks and how things are manipulated, because it's emotional, and because we have inexperienced people in the crypto market that just buy things, it's easily manipulated, because they're just dealing with emotions. The people that can make more money can just deal with emotions. So you either buy and hold for a really, really long time, or you kind of understand for yourself what you need, and kind of just, as I say, try and hedge against each element of the market. But that starts with really, really understanding what you need as an individual first. But the market will come back again, and it's understanding again when that might happen, and can you get through a potential drop until it starts coming back again, because it will. Yeah.
But I think we need to put a caveat in there as well. The market will come back, because at the end of the day, no matter what occurs, regulation or no regulation or recessions or none, blockchain and crypto is not going anywhere. Like, as a technology, it's absolutely proven its use case. And I think on the last call we talked about what are they called? It's the fourth turning, these 4 turnings we go through in one cycle, these 4 turnings. Yeah. And we're in this new phase where we're exiting the 4th turning called crisis into the 1st turning, where we make new things again, and society completely redefines itself, which happened with the last industrial revolution. And we're going through this now. So crypto's not going anywhere. The question is
a bigger cycle, isn't it? Again, the 4th turning.
Yeah, that's like
another cycle. So it's cycles within cycles within cycles. Yeah.
So although the market's not going anywhere, we need to ask, well, what will still be in the market? Because what we wanted to bring up on this call was this idea that right now alts are pumping, and that's good, but they're pumping either as what Richard thinks here, this kind of complacency, this top that's not the real top and is the precursor to a drop, or it could just be what's called a fake out, where it looks like everything's going in one direction and then all of a sudden it just swings. So this idea of knowing that there's cycles, knowing that you're in a cycle, and if you want to play with altcoins, understanding that tomorrow they could just all drop, understanding that we're not on a big arrow pointing up and we're on recovery, is really important, because it will completely change your investment decisions. I've taken the view at the minute that I'm pretty much out of everything other than Ethereum and Bitcoin, and I'm holding a handful of small bags of some layer ones I'm happy with. And I've done that because I do not have the energy or the time or the inclination to care, to spend any time looking at it. And that's, for me, is safety. Yeah, and I could be missing out on 1,000 opportunities, but I know that what I have is safe. So I think that's the caveat I want to bring into this, is the market isn't going anywhere. But understand that when we're in between complacency and, well, hope, which is all the way past the disbelief, be more careful than you would be, especially if you've never gone through this before. Because that's a really big thing. Like, there's a handful of us on this call that have been in for good 4 to 6, 7 years, maybe more actually. Jerry, I can't remember when you said you got in, but if you haven't gone through one cycle, the downwards is just as painfully emotional and crazy as the up bit is. Just one's a little bit more pleasurable, but they're both bonkers.
When you say that crypto's not going anywhere, and then a couple of minutes ago, Richard, when you were talking about Blackrock, when you look at, because I think we talked about crypto as an investment. What's the word? Like a vehicle, like gold. Like stocks. There's crypto now, and we haven't even got there yet. When you're talking about we're not going anywhere, companies like Blackrock, State Street, Vanguard, all these big ones, and then the institutional investors, and then the wealth funds. Crypto is too small for any of them to even get involved yet. Like, crypto may need another 5 years of massive growth before we're big enough. Like even Bitcoin, the mechanism of Bitcoin might be fabulous for all these people, but Bitcoin's still too small for them to realistically invest. Like when Richard says trillions, they've got trillions under management. That's so much money, and
I think it's the time that they're taking notice, and I think, and a lot of them have got a 50 to 100 year plan. They're planning to be around to own the entire world. So that's what they're doing, and this is just laying the groundwork. So it's significant, they're getting involved, and a lot of them are. Look, I think we're going to get pension companies and all sorts of things wanting to put Bitcoin onto the balance sheet. And we're going to have this massive shift, and that's going to create much more confidence in things. But as we said at the start of the call, I think it's around decentralization and centralization, and people are going to need to decide which one they kind of sit. And I think all of us, myself and Daniel included, we're still hedging our bets on some centralized aspects of things we've held on for a long time, even though it doesn't sit right with us. But it's like, you've got to put an investment head on for one reason, but you've also got to put in how you feel. I call it sovereign soul. It's like, what does it mean for me and individuals? How do I retain my sovereignty around moving away from banks and all these different things. It's like, you know, what's important for me and my family, and what do I believe, and who do I, and which side do I want to sit on, basically. And it's moving to that side more and more. So still around choice, but you know, we're primarily talking about where are we in the market. And just exercising caution, basically, in terms of investment decisions at the moment, because altcoins are the ones that pump the hardest, basically, and that's what gets most people, when they're in a little bit inexperienced, the most excited. But it's been able to have a plan, and I think that's what me and Daniel, before this call, we said, if you're in this space, it's like being aware of this stuff, not trying to be too terrified by it into inaction or action, but knowing why you're getting into something and knowing what your target is, so that you're holding something a little bit more short term. So expecting, or at least hedging, that it could have that fall off a cliff, basically, in terms of a drop, but being able to recognize for yourself, why am I getting into something? Am I doing it for my own reasons? And what is my plan and my exit for it, basically? And knowing if I'm making investments right now, just to be aware of the entire picture so that you're prepared in a little bit. So we always talk about why. Why is this important to me right now? Why am I doing this? Is it because someone else told me, or am I doing it for myself? And really trying to move to this place of owning the own decisions, and but knowing on a wider scale about, you know, the consequences of holding or selling or whatever that might be, really.
Yeah, and on that, I wanted to bring this piece up. There's a lot in here because this particular slide here builds over time, but I'm going to try and do it quickly. This is like a triangle of, let's say, risk, least risky, moving all the way up to most risky. And then on the left here, you can see right at the bottom is Bitcoin. With these pink one here is the sort of gains you could look. So over the course of a year or two, you might look at getting a 1 to a 2x on Bitcoin, 2 to 3x on Ethereum, 5 to 10x on altcoins that are high to mid, 10 to 100x on low altcoins, NFTs, ICOs, and IDOs. So you can see the risk going up, yeah? And the reason we made this was to bring some context to all these verticals here are all different things you might think about when looking to invest, from research, patience, tech skills. So as we move up in towards ICOs and IDOs, you need more tech, you need more skills to just even get into them. They're crazy how we get in some of these basic number skills, managing emotions, etc. So the darker the color, the more that we think it's needed. And as you can see, when you're just looking at Bitcoin along the bottom, it's not that there's no thought required, but the reason the conviction one is dark is because once you understand Bitcoin and you get it, it's so boringly simple and works, etc., that it doesn't require anything else. And so when we're starting to look at even getting into these altcoins now, if you're, this was more for if you're going to maybe hold something, but even if you're looking at something and riding these cycles and these waves, some of these attributes here are still needed, like especially managing emotions. As Richard said, it's altcoins that everyone gets into, and I definitely, we're going to be able to find it in time, that kid with all of the badges on.
That's near the start, I think.
Let me just see if I can find him, because he's probably my best meme. Yeah, here we go. Attachments. Here he is. That's what I look like. Because that's what crypto's like, and I am a collector of almost everything in life. And there was a point when someone said, how many coins have you got? And I was like, oh, is that a serious question? He said, yeah. And I was like, well, I don't know, 80. And he had 3, and he thought he had too much in his portfolio. He was trying to simplify. And I left and I was like, you've got 3 coins. Yeah, there's like 3. Like, what about all your small coins? And he went, I don't have any small coins. I was like, I've got 3 coins. I've still probably got 20, and that's because 15 of them I don't even think I'm holding. They're just there in the corner, just in case. You never know. So it's this time we're in right now. If we are in this part of the market, this complacency, if we're, for me, I thought we were a bit lower. I like to think Richard's not right, but he's pretty good at these sorts of things. I do take his word more than my word on this. So that scares me a bit, because I was hoping if we're at anxiety, we're closer to the bottom than where we are. But it is what it is. And I'm holding dry powder. I'm holding fiat on the side, waiting until there's a lot of pain. And that is not there's no other nice way of saying that. Although I did find the nicer version of that saying where they say, when there's blood on the streets, buy. The correct saying is, when there's blood on the streets, buy, even if the blood is your own blood. And I thought that softens it a bit. It means that we all, when there's blood on the streets, the likelihood is you are part of that blood, you are part of the pain, but it is the best time to buy from an investment perspective. So knowing that we're in this cycle, and also knowing that you're looking to get into altcoins, does require more skill, because when we're in this belief to euphoria space, you can throw mud at the wall. Like a rising tide in crypto, this wick up all the way here really does lift all boats. And I mean terrible boats sometimes, but they still lift. But when we're on the downward spell and you're looking to trade altcoins, the risk is what's the word I'm looking for? Like extra specially, even more so risky. I think I'll go with that. It's more grammatically correct.
Yeah.
So
I think the thing is as well, because it is crypto in inverted commas, and we talked about this before as well. Everyone, it's natural to think it's different, but to my mind, it's still just a company. It's still just a company that's trying to do something in the crypto space, and it's got people in it. And people in it, excuse my French, fuck up. They don't mean to, but they do, and they do things unintentionally. And unintentionally means things go wrong. And even big companies like Celsius and all this kind of stuff, they had people in it that made bad decisions, and that is the reason it's gone. Is anything wrong with crypto? No. It's what the people do. It's like, Daniel was using the analogy of a knife. A knife can be good or bad. You can chop fruit with it, or you can stab someone with it at the end of the day. But it's like it's the same with money and crypto and all this stuff. You can do. You can make a decision, and a lot of these things I think are unintentional, but I think centralization naturally puts people the companies, they don't mean to do some of this stuff, but they end up doing that, and the consequence is we think it's crypto, we think it's great, we think it's the new vanguard of investing, and it's immutable and all this kind of stuff, but we're wrong a lot of the time, because it's still people like operating these companies and making decisions. So, and the entire market is just open to emotion, as the Wall Street cheat sheet shows there. So I think all we're trying to encourage first and foremost is, if people are in this market at the moment and making investment decisions around lower cap altcoins, is have a plan. Know that if it does something, whatever it is that you need it to do, make sure that when it does it, you exit and you take some profit, and you've got some sort of security. So you haven't invested too much. You might be playing around with it. In the course as well, we have that vector which says you might be investing in something because you want to learn more about a certain sector or a certain crypto, or you want to learn how to use DeFi. You might want to learn how to use hot wallets or different bridges. That's fine, because I spent a lot of my own money investing in crap projects, but it helped me navigate through how to use certain things and skill myself up, because I wanted that time. I wanted to invest that time into doing, learning more about these things. So I thought that was a way to kind of like burn through cash to sort of build my own knowledge base, basically, and comfortability. But sometimes, if it means a lot to you, you need an exit plan for it, and that's really where I feel we need to urge more caution in here. As the people that kind of running this group, we just want to encourage that and really help people just to really sense make their way through what it is they want for themselves and what they need it to do.
So as we're coming to last sort of like 7 or 8 minutes, Jack's asked a really relevant question. He said, what telltale signs do you witness at different points in a cycle that might help you to prepare or react? So that was a really relevant question, and it's really got me thinking. And I definitely want to put in there to begin with, and I'd like everyone's views if there's anything anyone wants to say on this. I think there's people that will look at technical analysis, and then there's people that are going to look at fundamental analysis. So then my summary of those two is a technical analysis looks at a chart, and they would say things like the chart never lies, and technical analysis always think they're right. And fundamental analysis, who just take the piss out of technical analysis all day, saying they're just staring at charts and have no comprehension of the macro news events that are going around the world, would say that the world is the feedback system for what's going on the chart. I actually think both have got a lot of juice in it, but the reason I start with those two is because it depends on how you see things, probably, and what information you want to take. Rich?
I think it depends what you're invested in as well. If you're invested in big things that if your bigger part of your portfolio is investing in something you believe in, like Bitcoin. I mean, we talk about Bitcoin belief here, and like we're big Bitcoin believers, and I've been for a long time, and that's the biggest part of my portfolio. Then I only secure myself based on what I need on a day-to-day basis, but that's my longer term hold, and being able to, so I don't need to look at sort of major technical analysis to sort of know where we are in the cycle. I think what we'll share in the group after, Dan, is perhaps there was the alt cycle kind of swing. So we had the how to know where you are on a cycle. We can share that with Jack in the Telegram group after. I don't know if you know the chart that it's not it does not the be all and end all, but it certainly gives you certain signals in terms of where things rotate to and the things to look for.
This is on one of the that we put on one of the slides. Yeah,
it is on one of the slides. Yeah.
I'll find that just to flash it up quickly anyway, but you keep going. Let me dig that up.
But I think where I look more and more is and we talk about it as well, is like this group started as what we call the sense making group, and it bled into crypto because we're looking at systems and we're thinking of what we believe about certain systems, and then crypto basically offers a different paradigm to the current financial system, okay, like Bitcoin and all the rest of it. So where I come from is just kind of, I think the idea of sense making is really, really important for me in particular. So I just kind of zoom out, and that's why I'm interested in what Blackrock are doing, and I create my own thesis around that, while everyone else is saying, well, it's great because they're partnering with Coinbase, so adoption, right? It's going to be great. Well, I just look at the history of what Blackrock does, use my own sense-making skills to sort of say, they're probably going to crash the market to give a better entry for everyone. I don't know when that's going to be, but that's what it signals to me. It doesn't mean massive adoption. It will eventually, but what it means is this is probably what they're gearing to in terms of their own market kind of cycle and stuff. So, but I think more on a like granular basis, I think crypto Twitter is quite a good space as well to sort of start gauging what different people are saying. But it's been able to not operate in your own bubble and listen to one side of a story. There's like I try to look for sort of contrary information. So if everyone's saying it's going to go, people I trust saying it's going to go up, I look for people I trust that say it's going to go down, and then look at other information that I think is important for me to kind of like wait to push the two things against each other. So I think it's hard, but it's based on your own portfolio, basically, about what you've invested in. Is it a short term? Is it long term? How important is it to you? Are you really invested in it for the long term, and you need it to do good? If you can play that kind of cycle in your head that said, if everything crashes, how am I going to feel holding these bags for potentially another 2-3 years before I see them come back up again? Yeah, because it could happen. The macro things are we're in this a crazy cycle at the moment, like in terms of the fourth turning and stuff, where anything's possible, because as we said at the start, everything's priced in dollars, right? So everything's priced in dollars. What's wrong with Bitcoin? If it drops to $6,000, nothing's wrong with Bitcoin. It's the fact that it's priced in dollars, right? Bitcoin is still worth a Bitcoin, but if it means enough to you to sort of realize the price in dollars, then it's a problem. And that goes for any of these, any other crypto thing. I
feel that both of us gave political answers there, and I just want to cut. So I want to say I feel if Jack was there, he'd be like, "Yeah, but I want to know the answer." And the answer is, it depends, and there is no. Even if Jack was to say, "Well, this particular asset, how would I know?" It's like, for me, because I was feeling into it as you were speaking, Richard, I was like, "What do I do?" And I realized that I've been in finance, let's say, for a while, and I've been in crypto for 6 years or whatever, and so I don't do anything, and that's why I can't really give a fixed answer, like, other than everything Richard said and what Jerry said in the chat. I like charts, but I've just self-taught myself a little bit. I don't look at RSIs and things like that, but I am aware of like moving averages and the importance of moving averages. I think there's a few things on a chart that anyone that's in an industry where charts are a thing, and crypto is a chart thing, I do think it's important to see them. But again, even if you're in things like altcoins, I think knowing your market, knowing what cycle you're in is really important. But if you're only going to look at Bitcoin and Ethereum, your only thing you need to really care about are things like Bitcoin dominance, which is shown, even if I just quickly, and we just might run over a minute or two, but I want to just show you this. Even if I go onto any crypto coin checking site, see at the top here, dominance. So Bitcoin is just shy of 40% at the minute. So what does that tell us? That tells us that 60% of the wealth, this is the market cap here. So the market cap of the whole crypto industry is 1.1. Hang on, I can make this bigger. There we go. 1.1 trillion. And Bitcoin is 40% of that. So when Bitcoin is at its peak and is really pumping, Bitcoin dominance can be as high as 75%, maybe higher, but like, let's say 70 to 80%. And I don't think I've ever seen dominance less than 30. So that tells me something straight away, but it's only relevant if it's kind of relevant. Like if you're, for example, if you're not looking to buy and sell, there's almost no relevance to it. Like if you bought some, I've got friends that have bought Bitcoin long term and they're just in it. So for them, the cycle doesn't count. So there are a lot of other factors to think about, but the answers are so big. And I think that you need to understand yourself, other than basic chart reading, whether I like charts, because you're going to learn where you're going to get your information from. Like Richard uses Twitter a lot, or uses market sentiment and a couple of trusted people to gauge their opinion. And that's what we would call proxy sense making, meaning someone else has made sense of something, but I trust their ability to make sense of that. Like the old adage, don't take fitness advice from an unfit person, and don't take financial advice from a poor person. So don't take chart reading and chart advice from someone that's not gained their own wealth from that experience.
I think that to try and sort of wrap up, I think the main thing we've tried to do, and as we were building the course and delivering the course, we realized more and more the most important thing was for us to not tell people what to do. If we tell people what to do, then they blindly follow. And I think what crypto offers, if we went down the decentralized route, is the possibility of regaining your own sovereignty. And your own sovereignty means you're taking something back. You know, you're taking responsibility back over your own finances, your own potential wealth, your own potential privacy and security, and all these different things. And so if we tell people what to do, we're not enabling anyone's sovereignty. You know, all we can do is say, this is what we think, but these are the two paradigms that we're operating in all the time. This is what currently is happening in the finance world and in the banking world, and this is what Bitcoin potentially offers, and this is what XRP offers. We're figuring this stuff out at the same time, basically. But I think the main thing is we just wanted to offer like the opportunity for people to start making their own decisions, because that is the most important thing. And that's why I do these calls, is to try and enable people to kind of navigate their way through all this noise and decide what's important for them and make those decisions and just have conviction around them. And I know Daniel does exactly the same because we talk about it all the time. And so that's what we encourage. And that's why we just don't say, do this, or we think this, or we do that. I'm basing my decisions on what's important to me. And Daniel's doing the same thing. And we talk about all our reasons for doing it. And we ask each other questions and navigate our way through it.
And still do different things. Like,
Yeah,
we're
still do
very
different
different in
things.
some of our approaches, but I will respect where you're coming from with something, and it just goes in there as is this a piece of information that's relevant to me, useful for me? And I know Richard does the same.
Yeah.
Which is why sovereignty is the core of everything that we do, of whatever it is. Like, the more, whilst neither of us believe that a world full of truly sovereign people only is the answer, because you can be a dickhead and still be sovereign, you're a sovereign dickhead, that our view of this idea of socially sovereign or sole sovereign, whereby I own myself, I understand myself, and I understand my capabilities, my shortcomings and everything, and I'm working on that. And I understand I am a part of something bigger, and that my participation in this larger aspect of the world will hugely make a difference, along with everyone else's participation, into where we're steering towards. And it's this combination of sovereign human beings on the planet that aren't owned by other people, but at the same time own themselves and understand that we're part of something larger than just me. So I hope this is useful. Jack, I do always try and call out when I feel like we've given a political answer, but unfortunately there is no like fixed answer, and I hope you can understand that. Cool, man. We're going to bring this to a nice end. I know we're a couple of minutes over, and I know we want to always try and keep it tight, but I would love to get a couple of people's takeaways or has. I'd love 3 people. If you haven't spoken already, this is a really nice time. We're really nice people, I promise. But nice people would say that if they weren't nice people as well. So take it with a pinch of salt. So if anyone wants to share your takeaway, your ahas, that would be really, really lovely.
Makes it all worthwhile for us.
Yeah. And if you're unsure about when to speak, the sooner you speak, the less awkward silence we have to hold. Jerry, you're unmuted. You have to go first.
Well, I feel like I've spoken too much, and I just wanted to keep my mouth shut. I could probably talk all day, but let me compliment you on that chart that you showed, the big horizontal chart with the different gradations in there.
Oh yeah.
I think that was really well done, and what it does, as much as anything, is break down the crypto market down the left side of the chart, because I think a lot of new people, and I know this was a portfolio based kind of talk too, and a lot of new people getting into crypto think, holy smokes, how do I understand this whole crypto market? It's like, how do I understand stock investing? And you have to understand the different aspects of the market. And I think what that chart does a good job of is giving you the blue chips, Bitcoin and Ethereum. You said you hardly have to think. You don't have to think. If you have $1,000 and you're going to invest in it, buy it. You don't have to think, right? Just find a way to buy it, find a way how to cash it out. You don't have to think. If you have 2,000 and a little bit of risk, you might want to branch out. And I'd be curious what you did by going to the top of the CoinMarketCap page. And I don't know what a lot of people use. I use Live Coin Watch, but CoinMarketCap is a great breakdown. I wonder how many people really understand that site and the way that site can be fleshed out to show different aspects of it. Layer 1, NFTs, DeFi, right? And I think to give an overview of that site even is a way of giving an overview of the crypto market, and might take some of the opaqueness away from it. You talked about sovereignty and building a portfolio. I wonder if knowing the crypto market, there's DeFi projects, whether, and how, how decentralized they are versus not, but what a layer 1 is, like what things are being built on. Is there a way to easily break down the crypto market, what it is, how to find out what those things are, because I know CoinMarketCap does a great job of it, and then putting that, without telling people what to do, kind of putting the different aspects of what the crypto market is into your, range of risk, right? Somebody with no risk isn't going to get into NFTs and that kind of, like, that's a little further out, right? So
I'll tell you what you need to do, Jerry. Everyone needs to do the course, because we say how to navigate your way through that. That's like
sorry, I didn't do the course.
That's cool. I think that's the short answer. That's the short answer, I think.
Yeah, I just want to put a caveat on this as well, because we always say we don't sell an FLT. The course is donation based. We put a lot of time into it, but we really are working on providing something that has value. And our belief is, if it's got enough value over the course of time, universe will pay that back in one way or another. So it was designed for people to have no skill or experience in crypto or finance or anything. And ultimately, it's more of a financial sovereignty course than crypto, but it does contain more than enough crypto to get going. So I want to put that in there, because I know we've mentioned it a few times. Don't want to think that we're shelling our own stuff on here either. Let's take one more. Bri, I know you messaged you're happy to share something. Do you want to put your 2 pence in, your takeaway or ahas?
Well, I take away, I like what you said. I believe you said that you currently, because of the market and cycle right now, that you are holding maybe like 3 different things. You don't have to think about it and not do research. And that's kind of like, I guess, made me feel like refreshed and kind of good, because that's what I've been kind of doing, and kind of like saying, okay, great. It's nice to have somebody on the same page. And I accidentally got back into crypto in 2017, 16. And I kind of just held. And this was the first year I actually purchased like altcoins. And something I probably might not do in the future. I always just had Bitcoin and Ethereum. That was it. Since about 2017. And I think it was when all the altcoins started getting really, like pumping this year, and kind of a whole fear of missing out type of a thing. And I bought some, and it's kind of nice to, now I'm like, okay, this was a nice learning curve for me to kind of just go back to where I started with. So I'm kind of excited for the next push into hopefully a different cycle soon.
Well, I'm glad, I'm really happy for you to share that, because I at least know that one person has been impacted from that as well, in the sense of feeling calm about it all, because without it, this feeling of FOMO, whilst it is a part of human nature, I do think it's also marketively driven into us, like gotta have, and all these, I got a 10x yesterday and 100, and it's like, it's scarily sexy. So I think a bit of calmness, it's one thing we didn't cover on this call that we were going to. I said to Richard I wanted to. Richard said, oh, well, all the altcoins are pumping. And I said, oh, I didn't know. And as he said it a few years ago, I would have literally been on the side of this call buying, because I didn't want to miss out. And when he said it to me, I said to him afterwards, you know what I realized? I'm not bothered. It's okay. There'll be, as my other friend Michael, I do a lot of work with, he's like, there's always opportunities. So Brian, you sit and hold your 3 coins.
We're all in our own cycle as well, aren't we? We're just in our own
exactly.
cycle, within a cycle, within a cycle, within a cycle. So what we decide sovereignly is the right thing.
So whatever you do, don't get too dizzy. All right, cycles will have a peak and a trough. Okay, people. That's enough for today. It's a real pleasure to get to do these calls again. We will be trying, as I said before we press record, it takes a lot more work than you think to just come on these calls and start chatting, although it might look like that's all we do. But we're going to be naming our themes a little bit in advance. I do want to say this in 2 weeks, 3 weeks time, so 2 full weeks of gaps. So not next week, not the week after, but the week after that, which is the 30th of August, we're having our first FLT live community meetup somewhere in the middle of England. Well, northwest, bottom of northwest. So it's middle if you include Scotland up to the Highlands. Yeah. So we're really good to see some of you. We'll have some food. We'll do a live call. Maybe a couple of drinks afterwards. Probably somewhere like around Manchester, Chester area ish. So it'd be really wonderful to see some of you there. I know there's a couple of people that haven't been able to make the calls who want to come as well. me and Richard figured if we're in a country together, we might as well try to have a meetup. There's a decent base over Mexico way as well. Next time I'm over there in a few months, I'll try and organize those a little bit more. And just start to bring back together what we really believed in this community, and help and guide those who are a little bit lost. Because when you go, someone's like, oh, well, I started Googling like crypto information online, and the volume of unregulated crap that lures you into buying things you should never be buying is insane. It really is insane. So we really do pride ourselves on safety and on having an open community, and I hope we do achieve that. So we want to push to get more of that in the future. So if you're in the UK around the 30th of August, please do come and join us. If you're not and you're listening to this back, we hope that there is tons of golden nuggets in here for you, a couple of laughs, maybe a few scorns, and we hope you are present enough throughout. So from all of us, from you guys and everyone else, thank you very much. Have a beautiful, beautiful day, evening, afternoon, wherever you are, and we'll see you in a few weeks.
See you guys.
Thank you, folks.
Bye-bye.
Bye.